All right, so get ready, because today we're going to be diving deep into how Web3 could completely, like, revolutionize banking as we know it.
It's a pretty big
It's
topic.
a huge topic.
Yeah.
But we have a great jumping off point, thanks to you guys.
Oh, yeah.
You sent us this really fascinating article, Il futuro delle banche nell'era del Web3 e della blockchain, by Marta Maria Moga.
Yeah, I saw that one.
Just published on December 11th, 2024. So it's like hot off the presses.
Very, very recent.
And what I thought was so interesting about it, and I know you did too, is that it's not just like theoretical.
Yeah.
She actually lays out some concrete examples and really tries to get down to like how this tech could impact our daily financial lives.
Exactly. Yeah, instead of just kind of throwing around buzzwords, Moga really takes a practical look. Things like getting loans or even owning property.
Yeah, that's exactly what caught my eye too. Like, instead of mountains of paperwork and credit checks, could you just use your Bitcoin or even like a valuable NFT to secure funds?
Yeah, it's a pretty radical concept, right? The article refers to it as digital collateral. And it all hinges on those self-executing contracts we've talked about before called smart contracts.
Yeah.
So imagine like depositing 1 ETH as collateral and instantly getting a loan for 70% of its value in stablecoins, which are cryptocurrencies that are pegged to, say, the US dollar.
So this is all starting to sound a little risky to me.
Oh, yeah, for sure.
Like, what happens if the value of my collateral suddenly plummets?
That's a huge question, and it's a crucial point.
Yeah.
The volatility of crypto is a major challenge for this kind of lending.
Makes sense.
That's where stablecoins come in.
Okay.
They try and mitigate some of that risk.
Okay.
But even then, you're still kind of gambling.
Right.
And the article doesn't shy away from that.
Okay.
It really highlights that this whole system would require very robust risk assessment mechanisms.
Okay, so it's not as simple as just like swapping out your house for an NFT and calling it a day.
Not quite, no.
Okay, good to know.
But speaking of NFTs, the article dives into another pretty mind-blowing concept: tokenized property.
Okay, break that down for me, tokenized property.
So think of it this way. Your house becomes an NFT on a blockchain.
Right.
But this NFT, it's not just a picture.
Right.
It's a legally binding digital contract that contains all the essential details, like ownership rights, location size, even floor plans and legal records.
Wow.
And the implications are huge.
Yeah.
So instead of going through traditional banks and mountains of paperwork, you could potentially use this NFT as collateral to secure a loan directly from a decentralized platform, all governed by smart contracts.
So no more like bank visits and waiting weeks for approvals?
Potentially not.
That sounds incredibly efficient, but what are the potential downsides?
Well, for one, the legal framework around tokenized property is still very, very much in its infancy.
Right.
And, as with any new technology, there are security risks to consider.
Of course.
What happens if someone hacks into the platform or manipulates the data associated with your property NFT?
Okay. Yeah, that is a scary thought. And what about that automatic liquidation we were talking about earlier?
Right.
It sounds great in theory, but what if there's a glitch in the smart contract?
That's a big question.
Yeah.
The immutability of blockchain is often touted as a benefit.
Sure.
But in this case, it could also be a drawback.
Right.
If there's an error in the code, it could be very difficult to rectify. And we're talking about people's homes here.
Yeah. Huge stakes.
The stakes are incredibly high.
It's really making me think about the balance. The potential of all this stuff is huge.
Right.
But we need to be really careful and really consider all these risks. And we can't just like blindly rush into this new world without thinking about, what could happen.
100% agree.
Okay, good.
Now, there's another piece of this puzzle that the article kind of brings up.
Okay.
Who's actually providing the funds for these loans?
Right.
If we're moving away from traditional banks.
Yeah, where's the money coming from?
And that's where DeFi comes in.
DeFi, decentralized finance.
Not
I've heard the term, but I'm not going to lie. It still sounds a little bit like a black box to me.
Sure.
Can you shed some light on it?
Absolutely. So think of DeFi as a parallel financial system built on blockchain technology.
Okay.
And it allows individuals to lend and borrow money directly from each other, cutting out the middleman.
So instead of depositing my money in a bank and earning interest, I'm putting my crypto on these DeFi platforms and lending it out for a return.
Exactly.
Yeah.
And the interest rates can be pretty attractive, partly due to the increased risk involved.
Right.
And platforms like Ahav and Compound, which are mentioned in the article, are great examples of how this works.
It's like the Wild West of finance.
It kind of is.
Where individuals are essentially becoming their own banks. But how is that regulated?
That is the million-dollar question.
Right.
The regulatory landscape around DeFi is still incredibly murky, and it's one of the biggest challenges facing the widespread adoption of this technology.
Yeah, it's clear that we're just kind of scratching the surface here, and there's a lot more to unpack. So let's continue this conversation in part 2 of our deep dive,
Sounds good.
where we'll delve deeper into the regulatory landscape and the potential impact of Web3 on traditional banks.
Can't wait.
All right, see you there.
Huh.
Okay, so we're back,
Back again?
and I think it's time to tackle the elephant in the room.
Oh, yeah.
Regulation.
Definitely.
We've talked about, the potential of Web3 to really shake up the financial world. But how are governments and regulators responding to all of this, like this tidal wave of innovation?
It's really fascinating. It's such a complex landscape.
Yeah.
On the one hand, regulators are understandably concerned,
Yeah.
about money laundering, fraud, all these illicit activities that could be happening in a decentralized system.
Makes sense.
But then on the other hand, they also want to encourage innovation.
Right, of course.
They don't want to stifle the growth of this whole new emerging technology.
It's a tough line to walk.
Yeah.
Trying to find that sweet spot between protecting consumers, but also fostering innovation.
Yeah.
So what are some of the challenges that regulators are facing?
Well, I think one of the biggest hurdles is really the nature of decentralization itself.
Okay.
In traditional finance, you have these clear intermediaries, banks, payment processors, and so on,
Yeah.
that regulators can hold accountable.
Sure.
But in a decentralized system where transactions are occurring directly between individuals on a blockchain, those lines of authority get really blurry.
So how do you regulate a system that's designed to operate outside of traditional control structures?
Yeah.
I mean, that seems like a recipe for a regulatory headache.
Exactly. And it's forcing regulators to completely rethink how they approach things.
Yeah.
They're having to develop new tools and frameworks to deal with all these unique challenges that Web3 finance is presenting.
So are there any concrete examples of how regulators are trying to adapt to this new reality?
Yeah, absolutely. So the Financial Action Task Force, or the FATF,
Okay.
the Global Money Laundering and Terrorist Financing Watchdog, they've issued guidance on virtual assets, including cryptocurrencies.
Right.
And this guidance recommends, for example, that cryptocurrency exchanges implement Know Your Customer protocols, or KYC.
Okay, yeah.
Similar to what banks use to verify the identities of their users.
So even though these transactions are happening on a decentralized blockchain, there's still an attempt to kind of bring in some of those traditional safeguards.
Yeah, exactly.
Yeah.
Trying to find those ways to mitigate the risks without totally stifling the innovation.
Right.
Now, different jurisdictions are taking slightly different approaches.
Okay.
The European Union, for instance, is working on something called the Markets in Crypto Assets Regulation, or MiCA,
Catchy.
which aims to provide a comprehensive regulatory framework for crypto assets across the entire EU.
It sounds like regulators are really scrambling to keep pace with the rapid evolution of all this technology.
Yeah, I mean, it's moving so fast.
But is all this regulation necessarily a bad thing?
That's a good question.
Yeah.
I think it depends. Badly designed regulation could definitely stifle innovation
Right.
and drive activity underground.
Makes sense.
But well-crafted regulation
Yeah.
could actually provide some clarity and stability,
Okay.
which can then foster trust and encourage wider adoption.
So regulation could actually be a positive force in a way, helping to legitimize the industry and protect users.
Exactly. If people feel confident that their investments are protected and that the playing field is level, they're much more likely to participate.
Okay, so beyond the concerns about illicit activities,
Hmm.
what are regulators doing to protect consumers in this new landscape?
That's another huge area of focus.
Yeah.
We talked earlier about the risks of smart contracts.
Right.
What happens if there's a bug in the code?
Yeah.
Or a user doesn't fully understand the terms of some complex agreement?
Right, because in traditional finance, you usually have consumer protection laws in place.
Right.
But those might not really easily translate to this whole decentralized world.
Yeah, you're absolutely right. So regulators are trying to figure out how to adapt those traditional consumer protection principles to this new environment.
Okay.
For instance, how do you define liability when a smart contract malfunctions?
Right.
Is it the developer who wrote the code?
Yeah.
Is it the platform hosting the contract?
Good question.
Or is it the user who agreed to the terms?
Yeah.
These are all complex questions that still need to be answered.
It seems like the legal system is really going to have to play catch-up for a while as Web3 just keeps evolving.
Yeah, I think that's a safe bet.
And this is where I think education is going to be so crucial. The more that users understand about how these technologies work, the better equipped they'll be to protect themselves and make good decisions.
Absolutely. 100% agree.
Okay, so let's shift gears a little bit to another important aspect of Web3, and that's data privacy.
Okay.
Blockchain is often touted for its transparency.
Right.
But that transparency can also raise concerns about how personal data is handled.
Sure.
So how do we balance the need for transparency with the right to privacy in this Web3 world?
That's a huge issue.
Yeah.
And it's still being actively debated.
All
On
right.
the one hand, you have these blockchain transactions that are inherently public.
Right.
Anyone can view the details of a transaction on the blockchain,
Okay.
but they may not necessarily know the identities of the people involved.
So the transactions themselves are transparent, but not necessarily the identities behind them.
Right. It's a bit of a gray area.
And even if the identities aren't directly revealed in the transaction itself, there's always that risk that somebody could link that transaction data to a specific individual through other means.
Yeah, that's possible.
Like if I use my digital wallet to make a purchase at an online store, that store might be able to connect my transaction history to my identity.
Exactly.
And then suddenly my entire financial history is out there for anyone to see. That's a little unsettling.
Yeah, for sure. It's a valid concern.
So are there any solutions on the horizon that can address these privacy concerns?
There are some promising developments.
Okay.
One is the development of privacy-enhancing technologies like zero-knowledge proofs,
Okay.
which allow transactions to be verified without revealing the underlying data.
Okay. I've heard of zero-knowledge proofs, but I'm not going to lie, they always sound so complex. Can you break it down for me?
Sure. So imagine you want to prove to someone that you have a winning lottery ticket
Okay.
without actually showing them the ticket itself.
Right.
With a zero-knowledge proof, you can essentially prove that you possess the information, in this case, the winning numbers, without revealing the information itself.
So it's like a way to prove you have something without actually having to show it.
Exactly.
Okay, that's pretty cool.
It's a way to kind of maintain the integrity of the system while also safeguarding privacy.
Another promising approach is the development of these decentralized identity solutions.
Oh, yeah. Those are huge.
Okay.
These would allow individuals to control their own digital identities
Okay.
and choose how their data is shared.
So instead of relying on banks or other institutions to verify our identities, we could have our own digital passports that we control.
Yeah, think of it like that.
That sounds really empowering.
It is. It's a big shift.
You could choose to share only the specific information that's required for a certain transaction without having to give up your entire personal history.
Right, exactly.
It sounds like Web3 has the potential to really fundamentally change how we think about identity and data privacy.
For sure. It's a whole new paradigm.
But with all this potential, there are definitely risks too.
Of course.
We've talked about the complexity of smart contracts, the lack of really clear regulatory frameworks, the security vulnerabilities that still need to be addressed.
There's a lot to consider.
Yeah, and it's easy to get caught up in the hype without really fully understanding the downsides.
Definitely.
So what advice would you give to someone who's, intrigued by all of this but wants to kind of dip their toes in cautiously? Like, where should they start?
First and foremost, do your research.
Okay.
There are tons of resources available online. Articles, videos, podcasts like this one.
Of course.
Learn the basics of blockchain technology, how cryptocurrencies work, the different types of Web3 financial services that are out there.
Okay, so education is step one. What else?
Start small.
Okay.
Don't invest more than you can afford to lose.
Right.
And only use reputable platforms and services.
Okay.
There are definitely scams and bad actors in this space.
Yeah.
So it's essential to do your due diligence.
So common sense and healthy skepticism are still key, even in this Web3 world.
100%.
Good to know.
And don't be afraid to ask questions.
Okay.
Connect with other Web3 enthusiasts in online communities and forums, learn from their experiences, get different perspectives.
That's great advice.
Yeah.
It's a complex landscape. There's no shame in admitting that you don't know everything. It's all about continuous learning and stay informed.
Exactly. And I think that's what makes this such an exciting time to be following all this Web3 stuff.
Yeah.
It's just such a dynamic space with so much potential, but it also requires us to be active participants in shaping its future.
Yeah, that's a great point. Okay, so we've gone through all the tech, all the regulatory stuff. We've even gotten kind of philosophical about Web3 finance.
It's been a journey.
Yeah. But now let's get down to what really matters.
The real world.
The everyday user.
Exactly.
What does all of this mean for the average person?
Right, like you and me.
Yeah.
What are the opportunities and challenges as this revolution unfolds?
That's the ultimate test, right?
Totally.
All this innovation is meaningless if it doesn't actually make a difference in people's lives.
Couldn't agree more.
So let's explore that. How could Web3 change your financial life?
Let's do it.
All right, so one big one that the article touches on is financial inclusion.
Yeah.
Moga suggests that Web3 could empower those who've traditionally been excluded from the financial system.
Right.
Is that really a possibility?
It could be transformative. Think about it.
Okay.
All you need to participate in DeFi is a digital wallet and an internet connection.
No bank account, no credit check, no geographic limitations.
Yeah.
It could be huge for people in underserved communities, those in developing countries, anyone who's been shut out of traditional banking.
That's a powerful idea, just like leveling the playing field, giving everyone access to these financial tools and services.
But there's a big assumption there.
What's that?
Everyone has that internet access.
Right.
And everyone knows how to use this technology.
It's the digital divide.
It's a real issue, and we can't assume that Web3 is a magic solution.
Yeah. We can't just like wave a wand.
Exactly. We need to invest in infrastructure, education, user-friendly interfaces.
So the potential is there, but there's still a lot of work to do.
For sure.
All right, so beyond financial inclusion, let's talk about efficiency.
Okay.
Web3 could really streamline a lot of these financial transactions, make them faster, cheaper, and more secure.
Absolutely.
And I'm all for anything that makes my life easier and saves me money, so give me some concrete examples.
Cross-border payments are a great example.
Oh, yeah.
Right now, sending money overseas can be a nightmare.
A slow, expensive nightmare.
Multiple intermediaries.
Fees galore.
But with blockchain, those payments could happen almost instantly and with way lower fees.
Okay, I'm liking this.
Because you're cutting out those middlemen.
All right, so it's more accessible, it's more efficient.
Yeah.
What else?
What else? Well, we talked about this earlier, but it's worth repeating.
Okay.
That potential for more control over your financial data.
Right.
In the current system, our data is held by these huge institutions.
And we don't always trust them.
Right, and with all the data breaches and privacy scandals.
Exactly. It's a little scary.
But with Web3 and decentralized identity, you can actually control your data and how it's shared.
No, yeah.
Imagine having a digital wallet where you choose what information is shared for each transaction.
So I don't have to give up my whole life story just to buy something online. That would be amazing.
That's the idea.
But we've also talked about the risks, the smart contracts, the lack of regulation, the security vulnerabilities.
It's a lot.
Yeah.
It's easy to get caught up in all the excitement without understanding the potential downsides.
So for someone who's intrigued but wants to be cautious, what's your advice?
First, do your research. There's so much information out there.
Yeah.
Learn about blockchain cryptocurrencies, the different Web3 services.
Education first?
Then start small.
Okay.
Don't invest more than you can afford to lose.
Right.
And be careful about the platforms and services you use.
Because there are scams out there.
Unfortunately, yes.
So even in this Web3 world, we still need common sense and healthy skepticism.
Absolutely.
That's really good advice.
And don't be afraid to ask questions, you know?
Right.
Connect with other Web3 people online, learn from their experiences.
Yeah, it's a lot to take in.
It is.
But that's what makes it so exciting. Right?
It's constantly evolving.
It's dynamic. There's so much potential, and we get to be a part of shaping the future.
It really feels like we're on the edge of something big.
This whole deep dive has been incredible. You know, Web3 loans, tokenized property, regulation, data privacy.
We've covered it all.
And it's clear that this technology could revolutionize our financial lives. But it's not going to happen passively. We have to be informed. We have to be engaged.
We need to be thinking critically about all of this.
Absolutely.
Yeah.
Well, on that note, we encourage you to keep learning, keep exploring, and thank you for joining us on this deep dive into the world of Web3.
Until next time.